trading platform from CME Group. It was a widely unpopular thing because it was going to take away the member, the control of the markets from the members, and it was going to give control to those on the computers, nameless, faceless people on the screens. So IRA pushed through more funding in the on the board of directors of the CME Group for Globex so that they can continue to develop it. And then when it became time for side-by-side trading, IRA was the one that spearheaded it so that the membership would approve it in the member meetings. The long and short of it is that IRA is one of the best people to ever come out of Chicago, let alone to ever come out of this business. He's one of the smartest people I've ever met. He's certainly the most well-read trader I know. He's owned and traded his own hedge fund. He's, gosh, I just can't tell you the kind of stuff he's done. And now he's a widely read blogger as well as trader. Hold on, I gotta fix my headset. All right. So whatever questions you guys have, please let me know, okay? Okay, let's see here.
Yeah, also you guys can post questions in the chat if you come up with some, and if you want to, let me know. I'll be monitoring the chat, so if you want me to unmute you so you can ask the question, let me know.
Hey Adam, look at the text I sent you.
Okay.
Hey, look at that. Sarah Goggin is here. Sarah was a clerk on the floor that I knew years ago. She's the sister of Kevin Goggin, this big Irish family. She's married to a broker. Or wait, she was married to a broker from the S&P. This guy named, what was his badge? BMY, Brian Malcolm Young. I think she divorced him. Married to Pocket. Oh, Pocket, you've got to change your name. Phil Ricciardi, he's got initials after his name. He's a CTC. Good on you. I'm Pax. I'm a JAGOFF. All right, above 3802, 3811 is going to be the next macro target. Above 3811. Well, it's a lot more than that. What the fuck is this? Okay. There you go. Remember, it's really simple. I don't know why in the hell we all want to make it a lot more difficult than what it is, but we've got the opening range today, 3762. I didn't write them down, did I? No, I didn't. We've got the get these down before Ira gets in here. We've got these. We've got today's opening range. We're long from there. We've taken profit all the way up. Paid for him at 60. Long at 66.5. Paid for the trade at 70.5. I think, right? Was the pay line, and then taking profit at 84 in here. It's not that difficult of a proposition to say above here I'm long, below here I'm short, and here is where I'm taking profit. And now I can just sit and let the market do the rest of the work for me. I don't have anything to do because the market will do it. Easy like Sunday morning, Senor Ramirez. Easy like Sunday morning. Once we pay for our trade, we put our feet up and it's easy like Sunday morning. I have 3/4 of my unit on. So if I'm trading 4 lot units, I paid for my trade at 7/4. I've got a 3 lot left. Put one at the next target, another one, sell another one at the next target. I've got a runner on. That becomes my swing position or longer term position. And I have no damn risk. I have absolutely no risk. All week long, we've had no risk trades on. It's been a great week to trade. Not a great week to invest, but a great week to trade. Actually, it's a fine week to invest. Then again, who'd want to buy them up here and put long positions on up here? The way that we trade, the market gets us long. But if I'm going to start trading my opinion, and in deep trouble. It's easy like Sunday morning. I was doing he was doing a podcast, so he may be a minute or two late. I took the time when I was a clerk. I didn't have a rich father. I didn't have a rich uncle. I didn't have any clout on the floor. I didn't know anybody. So somehow I got the idea, I don't remember if somebody told me or if I just started to do it on my own, but I got the idea that if I started to talk to the big shots, if I started to say hello to the guys that had big reputations or had good reputations, then they would start to say hi back to me. They would start to, respond back. So every morning I would say, "Good morning, Ira. Good morning, Ira." Good morning, and to other traders too, other guys, other brokers, traders. And eventually they had to start saying my name back to me. Eventually they're tired of, looking at me and saying, "Hey, yeah, how you doing?" So they start responding. Then they look at your badge to see what your name is. Then he starts saying my name back to me and, "Hello, Matt. Hello, Matt." And that's how these guys got to know me. And then, then they would ask somebody, "Hey, who is that guy?" And now your reputation follows you. "Oh, that's Matt Kanai. He's a great, Matt is a great clerk. He works for Mendez. Great clerk, got a great future." "Oh, okay, cool." Then when I became a trader, he had already known me from saying hello and good morning and whatnot. And so when I had questions, I would, about anything macro fundamentally related to the markets and capital flow, I'd ask him. And he would take the time to answer. He didn't have to take the time to sit here and, talk to some, new trader, young guy, but he did. Anyway, this has been a very, very good week. On the streets of Rome and the Colosseum. What's a high in the NAS? Oh, that's a good high in the NASDAQ. I think we've seen the high, guys. I think that we've seen the high of the days. We'll see after Europe's close. That could be it, at least for now, going into the afternoon.
Just leave the runner alone.
Yeah. Oh, hey, listen, just because I think the high might be in for the entire day, that doesn't mean that we cover our runners. We leave our runners on, yeah? Because tomorrow we extend, or maybe overnight we extend. Oh, you got it already? Good. Does that make sense? I wanted to make sure I answer that right. Just because the high is in, or I might think it's in, doesn't mean that we exit our runners. We've paid for the trade. We've taken profit a couple of times. Maybe you've added, maybe you didn't. But we leave our runners on with our scratch stop in, and the market is, because we're satisfied with what we've gotten so far. You've got no risk on it. Let the market tell us if we're going to extend higher. You've got a free trade on, literally a free trade on. So if you're trading 4 lots, you've got that 1 lot on. If you're trading bigger size, you got more on. If you can't get out, put more on. More on. Get it? If you can't get out, put more on, more on. Average your trades. Oh, Penn, you're here. Hello, my sister. How are you, Penn? Not much, sister. Yeah, that's it. I can't watch this either. There is absolutely no news program that is worth watching, or station. Oh no, I can't watch Fox. Or CNN. Fuck it. Oh shite. When you bought Penn, when you bought the S&P yesterday, did you wait? Hold on. I did a bad thing about S&P holding my nose. Free cash close. I was happy this morning. Took profits instead of. Oh yeah. I remember somebody saying, you don't go broke taking profit. You don't go broke taking profit. And actually you do. Doing with a mask on. I got an electrician over here. Jeez Louise. Yes. All right. So Woj asked me in Discord, just asked me a good question. Any significance if the NASDAQ starts trading below the weekly opening range? Yearly opening range? Yes. So in the S&P, it's kind of it's a non-issue right now because we're 40 or 50 points. Okay. We're 40 points above it. The NASDAQ opening range today is, you got 200 points into that too, right? Or 100. Excuse me. So the S&P opening range is 736. James, you're still long S&P? I mean, NASDAQ? You're still long NASDAQ, James is, I'm guessing. Shit, he's not even in here, for fuck's sake. But all right, anyway, so you're long, if you're long NASDAQ, if you're trading NASDAQ, you've got a decision to make. You're long from today's opening range at 736 half, paid for the trade, taking profit all the way up, stopped at the price point, good high, can come off, wonderful. Well, you've got the decision to make. Do you flatten up at the yearly opening range?
I said,
hey, handsome.
all right, I'll be right with you. So I said, yeah, that's the way you have to look at it, right? So,
right.
And I just did this. I just did a podcast. I said, if you have $1 million and you put it in a T-bill, a 1-year T-bill, you're going to get $2,500 back for the year. So if you playing with the penny slot, so to speak, and if you've made 10 times that, which isn't a lot of money, by the way, on a good investment, you're way ahead of the game. And that's how you have to look at it, Aaron. No other way.
What I liked about Glencore was they were dividend yielding.
Yeah, they cut it though.
And I saw where they fit into sort of the future.
Yeah.
Like, you know, everything is going to get away from fossil fuels and we're moving towards clean energy, and without cobalt, you don't have clean energy.
Exactly. Very good. But you know, they canceled their dividend. They're going to reinstate it. That's why the stock just went up $2.
I thought it was like 4.3%. When I did the research, it was like 4%.
No, they cut it. They cut it out totally. And now, but at their last meeting, they said they're going to reinstate the dividend because they've been making a shitload of money in copper. So, and the reason that they cut the dividend was a good reason to pay down debt, because they have a tendency to take on too much debt.
So my eyes right now, even in my casino funds,
Yeah.
a lot of it is sitting uninvested.
Right? It's okay.
Because I sold off all of my IVB when, right around the start of COVID.
Yeah.
I got a bad feeling and I dumped a lot. And I dumped my 401k contribution.
Oh yeah, we talked about it. I did the same thing. I liquidated my total SEP fund. Total. And I haven't gone back into it, by the way. So I'm an idiot.
I'm
But
back up to 3%. I was at 8-10% contribution. I'm going to probably go back up to 5 when I get back home.
okay.
But what I'm thinking under Biden is I can see him
I'll be right with you, Matt.
Take your time.
kind of getting back to infrastructure projects.
Oh, damn. That was really interesting to listen to. And I would have loved to have heard what they were going to say on infrastructure. I don't have any idea who that man, who Ira was talking to, nor do I want to know, just because of what they were talking about. I'm sure that that's some proprietary information, which is why Ira muted out. But I found that to be really interesting. Here's a guy right there. Obviously, he's a man of means, not somebody who's just making it up as he goes along, that covered his IBB before COVID really hit because, well, he had a bad feeling. Trusted his gut, and he acted on it. And look how much money he saved or made. Look how much money he locked in because something told him that he needed to cover. It doesn't get more important than that. It just doesn't. Trusting your gut is not something that comes naturally. Yeah, Phil, just, I was going to talk. Yeah, I was starting to talk about that. No, the NASDAQ yearly opening print is 889, 889, 12,889. 12,932, I believe, was Monday's open. Let me look. Was Monday's regular trading hour open. But the first trade of the year is going to be what we use. What was that first day? Yeah, it was 933. So those of you guys who are tracking the yearly opening ranges, make sure that's actually a good point. I know that I've talked about it.
Okay, sorry.
No, thank you. That was great. And
What was
just-
great? I didn't do anything. I was talking to my son.
no, just the second, the minute that I was able to listen to him, and he said that he was talking about covering a position before COVID hit because he
Oh no, right when it hit.
yes, and because he was uncomfortable with it. So I made a point real quick and before you muted us out about how important that is to once you're an experienced trader, or once you have a process or a methodology to trade, and you learn how to look at the markets, visualize the markets, and then take action. Trusting your gut is something that you need to do.
Yeah. No, absolutely. I can't agree more. Absolutely right. So, but he says he's he's a medical data programmer for a massive hospital in New York. So he was seeing the stuff coming in, for the data, because he's inputting stuff all the time. And he's their lead guy. So he's analyzing it, not just inputting data.
Yeah.
And it scared him. So he said, well, I don't know what's going to go on. And it was the right thought. But now, just like with me, on February 14th, I had put out that in my blog very openly. I'm liquidating my SEP account, which I think the S&P was at 3,400. And then it dropped, and I never reinvested in that account. Now, yes, I was busy, and my wife and mine joined trading, stock account, which I was very open about buying Freeport, buying Archer Daniel, buying Bunge. I was very open. In fact, I just finished a podcast just now. I just finished something with Louis Gavet from GabCal, who it was in mid-May last year that we did a podcast. The first time we ever had talked with each other. And out of there came a lot of, because at the end of it, he said, well, what would you be looking at? I said, well, I'm buying Freeport, I'm buying Bunge, I'm buying Archer Daniel, I'm buying Glencore. And he goes, own it, own it, own it, own it. So, we just picked up, this is a very good podcast. And I'm not saying it because this is one for people who need to know a few things about what's going on in the world is worth hearing. So I when it gets published, which it will soon from Benugli's, and he kind of just let the two of us go. We cover a lot of ground. So, all right, let's go. I know you got to go to the doctor.
Yeah, it'll be,
Wait.
Zoom. It's a home meeting, It'll be on the.
Okay, so how are you feeling?
I'm tired, I intermittently get. The last couple of days have been just like exhausting, where I'm exhausted. But I mean, generally, I feel fine. I still haven't gotten my endurance back.
Yeah.
from running and working out, but it can also just be because I'm not in good shape now.
And the family would deal with the still grieving process.
Yes, the whole thing. So Jen and I are going away for a few days next week, just the
Good.
two of us, and
Good.
it'll be
You
nice.
need it.
Yes,
You need it. I guarantee you need it.
I know it. I know it. How are you
So-
doing? Everything good with you?
Everything is good. And my wife and I opened a bottle of champagne on New Year's Eve, drank the whole thing, which is and we said, you know, if I told her, I said, if you complain about anything, or if I complain, just slap the shit out of me, because you know our health has been good. Yeah, I have nieces and nephews who have been ravaged by COVID, but they're young and strong, and certainly have overcome it. Our kids were all employed. We had 2 new grandchildren. Nobody, I said, if either of us complain about it, just slap. I'm just going to slap you. Yeah, just, okay, shut up. Because we really, so thank God, and I really mean it, we've done as well as anybody's entitled to do during these really terrible times. So I have nothing to.
Yeah, and that's really how we celebrated too this year. It's been a strangely beautiful year. It's been a tragically beautiful year.
Yeah, no, it's a well. I mean, I've learned a lot about myself again. When you get locked up, you understand what people who are forced into any type of containment situation. You start to think about things. All right.
Oh, so much going on.
All right. So I'm looking at the questions. You know what? I don't know for Shelley's questions on taxes.
Yes.
I don't know. Nobody does. Will they go back up to 28% corporate tax? I think that would be a mistake. I don't mind lower corporate taxes if you find the way to get the money to pay for all the things that you want to do. Then personal income taxes should go up, but they'll have to work this out. And it's not like they have an overwhelming, there is no mandate. So hopefully we'll get back to good discussions in Congress, and they'll actually come out with something of a more positive nature, and they'll stop just carping at each other and beating the hell out of each other, and actually get something done for the American people. I know that's but I don't know. I don't know where taxes are going. Right now, the equity markets are telling you that it's not a concern, right?
That was actually the first thing that I thought of this morning, and what I pointed to last night when I was talking to my oldest daughter about she's at University of Iowa grad school, and she was watching the news and kind of freaking out a little bit. I said, the markets aren't reacting, so the markets aren't reacting. We can look at the markets as a pretty strong barometer as to whether or not, what's going on here. The markets aren't reacting, Jen, so just kind of, take it easy and don't get sucked into, all of the rhetoric here on the news stations.
Yeah, I think that's, you hate to think, well, it's only, markets, but they will give you a signal as to what people are thinking. And the video, and now the thinking is that they overplayed their hand. So now they're really going to be pushed. Now all of a sudden Trump, is on the defensive because for so many reasons. But anybody who could have been surprised by this, really, they didn't understand why they despised the man for so many years, for the 4 years, because again, and I'm not an anti-Trumper. He was actually online to do some decent things, but what made me crazy about him is the narcissistic personality, and having dealt with some people very close to me who really suffered from some forms of it, because it's on a spectrum of mental health, borderline personality disorder types of things, and things that I read a lot about to try to understand. And it's amazing the effects of it. But everything that happens was always about him.
Yes.
Yeah, and that's what this came down to. So he was going to play it and promote it. I'm more disappointed. As I look at people like Ted Cruz. I mean, I know politically what they were trying to do. They wanted to secure Trump's base because Trump is not running in 2024. I don't believe it.
No, I don't either.
I don't believe it. Not that he wouldn't want to. He's just not young enough. There's too many. But the fact that you would go and chase that base with really, I think, very narrow-minded thought patterns. When I look at certain people, I go, why don't they state that they're so-and-so from Harvard Law School graduate? But really, I'm really starting to doubt how people get into these schools because I don't see much good coming out. But that's another storyline. So
clout.
But I don't know, Shelley, where these possible, really, I don't know how taxes are going to go, because you have some centrists, both Republican and Democratic, who are trying to carve out a position for themselves and are actually, saying, hey, I can't get dragged into this one, by the extreme ends. They have to learn that the media loves the extreme ends, because it's the same concept of if it bleeds, it leads. That's why the first thing you see is how many shootings take place on the nightly news, the local news, because the standard always was if it bleeds, it leads. Nobody wants to, nobody wants to hear that Matt Canada delivered 55 packages of needed supplies to neighbors who are struggling. What kind of story is that?
If it bleeds, it leads. And so it just continues to perpetuate the negative cycle that we've got going on all over the place.
Yeah, and that's what people hear, because if it bleeds, it leads. And that's the sensational. Listen, I can't go to zero hedge. Zero hedge is the sense, and I don't care how good the stories are. It's just because everything is couched in sensationalism. My fear is that all of a sudden Reuters seems to be going down it's the headlines, and I can't stand the headlines because the headlines are so misleading. When again, I'm with the Dion of who put it out there. When you listen to Ira, you get context and nuance, and the headlines are all devoid of any type of context, and their nuance is to titillate, whether they're titillating the algorithms into action or other people, they're titillation. So I try to stay away from that. I'm following down the line, and then am I still bullish grains and copper? Thank you, Denari, for that question. It's I am, but I'm in the the cure when you trade commodities and you understand commodities. Of course, as they always say, the cure to high prices is high prices, because farmers will react. Watch how much grain gets planted in the U.S. Now, of course, weather, although through the beauty of genetic modification of grains, that there are much more robust plants even without the water. So Brazil is a question in Argentina with politics, Brazil with, are they getting enough water? But the last ones I've seen, there is rain coming. But, and you're nice to ask that question because you know that it builds on of where I went months and months and months ago. The Chinese are certainly behind a lot of this movement in grains and copper and the Chinese are busy stockpiling. And why do I say that? Because look at the yuan, or if you want the renminbi, and the Chinese currency is so strong. Well, why does, and again, the Chinese are no different than any other central bank at this time. And if they want to be sending a message with the currency, is if you're importing, if you're seeking, and I just had this conversation with Louis Gavet, if you're looking to restructure your economy somewhat away from just an export-oriented economy to a more domestic consumption economy, you want a stronger currency because that enriches your middle class who you're dependent upon to drive that. And if you are busy stockpiling all types of things, grains, beans, corn, soy oil, look at the soy oil charts, meal, steel, copper, and you're importing them, you want to do it with a stronger currency. So it's not, watch that carefully. There is a great relationship. And as you'll hear, if you bother to listen to the podcast that I did this morning, Louis Gavet he puts it so beautifully, because he says, you know, the thing that should concern investors is you have rising yields in the US, but a falling currency, which is antithetical to what most people and commentators, you know, would talk about. Oh, the currency. Well, yesterday and, you know, today we're seeing with the movement on the 30-year, because you could see how much the gold and the currencies are tied to movement in the 30 years. That's how those algorithms are built. So 30-year yields went up dramatically as the curve steepened dramatically. But if you look over time, even with those rising yields, the dollar has struggled. And I don't think that's by accident, by the way. So if the dollar continues to fall, I think you will, Denari, continue to get upward movement in commodities. I don't think that this is over. And if you get massive fiscal expenditure from the Biden government, which I think you're going to get, but not just sending checks to people to continue trying to sustain the consumer demand, you're going to get real infrastructure projects. Now, of course, in their stupidity, the U.S. government, in anticipation, because we need infrastructure spending, they're the one, and especially if you get some type of green
Green New Deal, yeah.
build out, you're going to need massive amounts of copper. But they're going to be paying. It's not like when we started talking about this back when copper was $2.40 and $2.50 a pound. We're now at $3.70 a pound. So the markets have already pushed in anticipation. So of course, as usual, the governments will be paying top dollar for this. So these are things to watch. I think that they will sustain themselves going higher, especially if the global economy really starts to push higher. So the answer is yes, but again, view it as a trader and not as an investor, because you will suffer some setbacks.
All right. In that vein, with the sell-off that we've had in the 30-year the last couple of days, in the futures, is that just a trade, or are you starting to see rates starting to turn around a little bit and climb?
I'm a believer that the Fed and the U.S. government cannot tolerate higher rates. You can't. Now, there's been no discussion since August of the actual term in the U.S. of yield curve control. But this is one of my big things to watch. Now, I go out on a limb, which is not unusual for me, but if I'm right, so I look for possible canaries in the coal mine, so to speak. Now, we're going to have an interesting time here because Janet Yellen is going to be Secretary of Treasury.
That's exactly where I was going.
I think it's a good pick because I think she's well suited for it. And better, I did not like her as Fed chair because she, with the Fed listens and with what she did in Chicago, even back in 2015 with coming here and talking to, people who may have suffered through job losses. It's a nice thing, but it's not what I want for my Fed chair, okay? I don't want somebody involved in social justice. Now, I wrote blogs back then. I said, morally, I absolutely agree with Janet Yellen, but I don't want a Fed chair being a moral philosopher. I just don't want it. I want sound money and a fiduciary responsibility. And I don't want that to cloud the issue. Now, you could say, well, they have an employment mandate. That's not being a social justice minister. The employment mandate is a different thing. It just says, as much as they should be concerned about inflation, which is the second dual mandate, they need to see it in the context of jobs. and the underlying health of the economy. And that's, of course, why they got the vaunted, which I have argued against for over 40 years, the Phillips curve. I hated the Phillips curve because it's too static and it does not have an international component into how it measures the impact of wages. It was old and outlived its, I don't know whether it ever had any usefulness. You know, it was for the modelers in the economic world and the academics. I had seen enough of it. I was always opposed to it. But I think her as Secretary of Treasury, she will fill that, and she understands banking very well. Now, if everything gets too aggressive, now Powell has signed on to the Fed's not moving until all those who've lost their jobs or have their wages impacted through no fault of their own get back to where they were in January of 2019 for jobs and wages. The Fed's not moving. And that's why they keep putting off and talking about inflation targeting and, you know, a lot of other things. So now you have Yellen, and if I'm right, Jerome Powell will offer up his resignation after Biden's inauguration because he's not a fan of yield curve control. And if all this takes place and the Fed has to keep longer term interest rates down, they're going to have to embark on actual yield curve control. Now, Louis Gave says in November, December, the Fed was actively involved in yield curve control without telling anybody. But
Well, we talked about that, didn't we? In an indirect way. Or
Yes,
no, actually directly we talked about that.
But Lewis comes up with the numbers because we talked about an article that he had put out or an interview that he did, and he talked about the 10-year getting to 2%. Well, the 10-year getting to 2%, I thought was way high. They could never tolerate it. In fact, out of that piece, it wound up with a discussion between Mike Temple, who's a regular writer into the blog, and him and I have really become very conversant. He said 150. I said, I think you're high. I think at 125, the Fed really begins to panic. My feeling. I don't know that factually, but I start to do the numbers. And again, where you're going to go with me on this, Matt, and where you should go is that the cost of funding the U.S. deficit becomes problematic because the amount of debt is so great now. And when you get to the cost of interest on bearing that debt, starting to crowd out other discretionary programs, the politics are going to get very ugly. So I think it's mandatory that they come to some type of official yield curve control. And therefore, Powell resigns, and then Lael Brainerd, who, you know, the New York Times, as I talked, you know, famously said she was going to be Secretary of Treasury. And, I can't tell you how many people sent me that article because, you know, after I took the beating for thinking that it was going to be Lizzie Warren, but I understood that that was conditional on what happened with the blue wave. But, then, you know, New York Times says Lael Brainerd, and I said, no, I'm highly skeptical of that. So I was happy to see Yellen named. In fact, my son Toby, the day after the New York Times headline, sent me a piece that somebody else on the list had written that was going to be Yellen. And I was happy to see that. So I went out and bought a really good bottle of Japanese whiskey to celebrate the New York Times being so openly wrong. Because I love when those who pretend to know everything are wrong. It always gives me great.
I do too.
So I did celebrate that. So that will be my canary in the coal mine. And I'm going to tell you what, if you see that, sell dollars. If you see Lael Brainerd become Fed chair because Powell decides, you know, to step aside, that he's going to grab some of that good money. He's 67 years old. And what are you hanging around? You know, I'll make the case. Why are you hanging around? You've done as well as you can. There is nothing good that awaits the next few years and how to work this out. So, yeah, but if I were to see that, I would be a buyer of precious metals immediately and a seller of dollars.
What about the long end of the curve?
I would buy it.
Yeah.
On the break, because they will push it down. You know, if she got in, oops, hold on one second. I have, yes, my Alexandra, everything okay? Okay, let me call, I'm just on with the Matt Kenna group, Pax, so let me finish with them and I'll call you back. Okay, honey. That's where it sits. That's the way I see that. Because any type of real announcement of yield curve control would just be a ban. Then there's no strong dollar policy because you can't have it all that way. So let's see what happens. The Senate elections, Matt, I think we've talked about that. I think we might get better legislation because of it. I'm forever hopeful. Yesterday was not the proudest day in American politics. But I was not surprised. I was surprised. I had said to somebody on Monday, somebody I know who had served in the military with great distinction. I said, what would be the greatest event is if 20 or 25,000 veterans showed up to counter whatever was going to take place and say, we swore to protect the Constitution when we were in uniform, and I think it would have been a great statement for the American Republic, but unfortunately a few showed up, and I guess that woman who got shot was unfortunately an Air Force veteran. Yeah. What a terrible, it's not like it's not like we haven't seen these in the U.S., by the way. We can go back to Shays Rebellion. There have been periods of time that we've gotten through, but the power of the media and the pictures make it so much more powerful.
That's it.
It's not a good moment for a lot of people who think that they deserve respect, but I have great disdain. So let me get to Bitcoin, and you guys can take out your cat of nine tails and whip the shit out of me, because I'll tell you why I take that. Because, I've had, you were there, I think, in 2016 when I did Credelli.
Yep.
Talked about Bitcoin. And I said I love the blockchain technology angle of it, but my fear about Bitcoin is, and still remains that governments don't like competition. Okay? That's just my view on it. And it's been to my chagrin. But 2 weeks ago, I was out running, and I said, what are you missing about Bitcoin? And it hit me. I said, what I'm missing is that when people like Tudor and Druckenmiller and Kovner and what I call the titans of global macro are getting involved in it, they're getting involved in it because they get to play momentum push trades. This takes me back to the 80s and 90s. They're the power behind the market. And the banks can't really screw with them like they do in the metals, as the SAW goes or the AL goes, because they don't have enough ability to. And central banks have no role in it at this juncture. So they get to keep pushing. So they're on this pushing it. And you know what? Doing phenomenally well. So I offer a mea culpa to anybody, but it's not that I've been opposed to it. The only reason I was opposed to Bitcoin is I fear central governments and their ability to hurt me. And I thought that was the greatest fear. But at this juncture, it's not, because they don't as any type of real viable alternative anyway. What they do is their ability to create their own cryptocurrencies or electronic money.
It's going to be interesting. I wanted to ask you about Bitcoin as well, because I've been tracking it, the futures, since November, December. I've made a few trades. Anthony Cadelli and I have talked about it. Both of us have made a couple of trades in it, but I'm starting to look at Bitcoin more, and that encapsulates the reasons why. Everything you just said really kind of summarizes why I'm looking at Bitcoin as a tradable market, not an investable market, but for me, but I'm still a trader and starting to lean more towards investing because I'm getting older. But you know what I mean? As a tradable market, I think Bitcoin reminds me a lot of the NASDAQ when it was a new, before it really kind of took off. The NASDAQ was an inefficient market that respected its technicals, but would overrun things by 10, 15, 20 points. And those 10, 15, 20 points were a whole lot of movement. And it just reminds me, it's very inefficient. There's really, for every reason you just explained. So I want to get out and I want to push too, or I want to be able to take advantage of the pushes by the Druckenmillers and the Tudors and,
Right.
and the big shots of the world. It's a great market for that. But
it's, you know what, the futures have put it into a trading market now.
yes,
You don't have to have the coins. And they're playing and they're pushing until somebody pushes back. But who's can put, and that's what so when they talk about 140,000, I laugh, but hey, we're over 40,000 very comfortably today. And I wish I was long, I remember that day over that holiday weekend when they pushed it down, 4,000 points down to 16,200. And then we just turned around and rallied from there. And I looked at it that day, I go, wow, I'm glad I'm not involved. But then as I started seeing its pushback, I go, then it hit me. Usually when I'm out running, things hit me. And I said, wow, this is what I've missed here, because they are a dominant theme in this market, and I missed it. And when they're a dominant theme, they know how to push it. And you know what? Push away, boys, and women, because you're involved. And now with JP Morgan, these people who were totally missing on it, but they can't help it. But they've also not been able to see their book, by the way. Because wherever they're playing this, and probably in the future, I don't know what the volume in the futures has been. I'm kind of remiss. I should be looking at that.
5,000, 6,000 contracts a day. Open interest is maybe up to 8,000. Open interest is only around 12, 13,000.
Growing and growing, but it's growing. And
there it is.
And you know what? So that's where the play is being done. It's a global phenomenon because you have people in China, you have people all over the world, and especially people my children's age and younger, in their teens and 20s, who are enamored with this.
Yeah, I don't know the fundamental.
Me neither.
Yeah.
And so if you're looking though, but why isn't it? Hey, if you're willing to pay 150 million for a Picasso, why shouldn't I pay 40,000 for a Bitcoin? No, because
I didn't think of that.
because here's where the Fed is full of shit. They've pushed enough liquidity into the system that we know hasn't gone to economic activity. Well, all activity is economic, but it's gone into asset aggrandizement. And whether it's sport cars or that Gretzky rookie card sold for 100,000 a couple weeks ago.
Yeah, we talked about that.
Yeah, Bookbar put it out. And think about it. Okay. So people now have people who have money are just putting it out to wherever they freaking can go. And you know what? Okay. So now, as my wife and I think we talked about it last time, I have to go comb through my children's closets looking for baseball cards. Who knows what's in there?
I got a bunch of them.
Hey, you know what? Stacks. We got Magic cards. What else do we got it all.
Yeah.
And you know what? And I got Beanie Babies. Because when they start going for $3,000, $4,000, $5,000, I'm sure I have some that are going to be valuable. But you know what? It's just there's so much liquidity chasing for things to do. Again, I go to that $1 million number. Okay, Matt. I want you to take your $1 million and buy a 1-year T-bill today.
No, thanks.
Come on, Matty boy, let's go. Don't be shy. Let's, and again, for all you math aficionados, and I'm one of them. So let's see if you bought a 1 year. Okay, let's step out. Let's buy a 2 year.
Oh God, even worse.
Let's go. Let's buy with your million. Let's buy. Oh no, we'll buy a 1 year. Okay, so we buy a 1 year. So you know how much you're going to get on January 6th of 2022? You'll have earned a tidy $1,400.
Oh my God. A tidy.
Yeah, tidy. I used it, but that doesn't cover much for me. Doesn't cover my pizza bill of late.
No, it doesn't, does it?
So
Hey, Matt, you see on Phil's question?
I'm sorry. What
No,
was
say that again.
Phil's question, he asked the odds of the US creating digital currency and moving from paper, just like moving from the gold standard and buying back paper money for 70 cents on the dollar and use the difference of balancing the books.
Well, that's a great question.
It is a great question. I missed
That
that.
is a great question because I believe, but I'm going to move it to China. And that's why when you listen to Louis Gavet, who lives in China since 1994, although he's skiing in Whistler now, because he repositioned himself with COVID in Vancouver. But first of all, the United States couldn't do it. It would be a deflationary debacle upon the world that they couldn't deal with. And then they would have to have a total moratorium on the debt, if not an actual jubilee and debt forgiveness. I hope I'm answering this question right. So they could create an electronic currency, but they couldn't do it backed with any precious metal. Unless they took it to such unbelievable levels, okay, maybe. The Chinese can do it because the Chinese are not in that same position right now with all that issued debt and reserve currency hanging over its head, the role that it would play. And the Chinese, well, they're also stockpiling a whole lot of stuff. There's no question about it. I can't give you hard numbers. All I can do is look at the action of the markets well ahead before the economies take off, which tells me somebody's stockpiling. And I'm old enough, I don't know how many people in this room even know about the famed Russian wheat deal back in 72, 73, when the Russians were busy buying wheat from the US. And that was the first cry of beans in the teens because the amount of grain. And the Russians, processed it and it really sent it to the countries within the Soviet Empire, and they did it, with the subsidization by U.S. Department of Agriculture, by the way. So it's an interesting story, but the Chinese understand the power, especially if if you got money and prices are cheap. And when the Chinese, and we talked about this, Matt, when the Chinese started stockpiling, don't forget they did it by they bought every Brazilian soybean that they could. And why? Because if you go back, I'm going to go to, let's see, the real is all the way up to 540. But when they started looking at this, I'm going back to May and April, the real was all the way up to 550 all the way to 590. 5.9 to 5.5 to the dollar. And the yuan was, holding its own, so there was no change there, which was, record weakness for the real. And in terms of Brazil, which is why I was long Bunge grain, who is such a huge presence in Latin America, Brazilian farmers were getting paid record amounts of money in terms of real for soybeans, even though soybeans were still only, hold on, go do the work. Where were soybeans trading then? Of course, at that time period, they were a robust, $8.50 to $9. But in terms of real, they were record prices. And that means that they were really cheap because yuan was holding, fairly strong. So it was very cheap for the Chinese to start buying, and buy they did. everything that they possibly could. So it puts them in a pretty good position. And the bean prices are going up because the storage reports are, you know, the amounts in storage is very low. So if you get a problematic crop in Latin America this year, it's going, these, you know, we could, I'm not even going to say, because that's not my, it's a suckers, but think about where prices will go.
I've got to read about that. This is great. I muted out and just started taking notes. I've been taking notes the entire time we talked, but the great grain robbery.
Yeah.
And the metaphors and analogies and how that's going to play out now is just, there are so many incredibly important and life-changing things that are happening now in so many different places that we can go. Is there going to be debt forgiveness? What do they mean when they talk about reset? Does that mean debt forgiveness? Does it mean repricing gold, you know, to fit, you know, whatever? How are they going to change will the world continue to move away from the dollar? Will there be a shortage of dollars? Will there be a glut of dollars on the market? What is going to happen and how will it happen? All the while, how do we keep the equity markets propped up, either you know, real or artificially, or a combination of both? And frankly, what does artificial currencies mean anyway? Or, you know what I mean?
Right, cryptic, right.
Yes.
We, you know what? We don't know. No, there's a lot to learn here, and you're going to hear all the experts, but you know, and you know what? And the problem is all the experts. So when things are going to what some of them, I just got a note from one of our favorites, Alexandra. So
She's in here someplace.
yeah, she is. So I mean, if you think this is going to be a, you know, I've maintained it. I'll maintain it ever more. If you think that this is going to be a low volatility year, God, good on you, I say.
Yeah, I don't think so either. And I'm prepared for it, and ready to go.
Yeah.
Just as I am every day, though, you know, and these conversations help prepare me. I don't have, somebody had asked, somebody was asking earlier, I think it was earlier today, about what are you reading now? Or, you know, what are you looking at? Meaning you, not me.
Yeah. Yeah.
And I don't know what to look at. I don't know, you know, where we need to go. You know, in order to get our information and our news outside of reading it from a million different sources, and then trying to figure out what's true from the middle. What do you think, Ira? I mean, what are you reading? And I would never ask you that.
Well, you know what? Let me tell you, book-wise, I'm reading, because I finished The Breakup of China, which was written in 1898 by Lord Charles Beresford, because I was interested in, filled in some things where I was very weak at. So I went and looked at that because I wanted to understand that from that real-time perspective of the way he wrote. Now I'm in the middle of going back over. I'm actually rereading some things, and I'm not reading them as intensely. So I'm back reading Fernand Braudel book on. It's actually 3 volumes. I bought them for nothing. I gave them away to my nephew when I was cleaning out my books 2 years ago, and I realized, how do I not have these still? And those were all my annotated ones. So I bought some. Those were all hard copies because I bought them when they had first come out. So that's so the Wheels of Commerce. So, and it's the rise of, you know, capitalism, 1500s to 1800s. So he covers it really well. So I'm going back to look at some things just to see, because I'm not one who believes that, you know, that things are always different. Although I think that they are always different, and they're subject to their own context and nuance of the time. want to see what were the traditional responses. That's my purpose of reading for it. So, and I'm telling you, I'm reading the South China Morning Post more. I actually paid them. I can't believe it's a mistake. I know it. You know, I was getting it for free, but it ran out. And I was forced to go back to the Financial Times. I'll tell you what, they are a shadow of their former self. And
The FT?
yeah, the FT.
Yeah, they are. I'm no longer getting the paper copy. I just get the digital.
Yeah, that's I don't. Well, they stopped delivering it to me in Arizona, so I couldn't get it anyway.
I don't know if they stopped delivering it, or if Jen changed my subscription.
Well, yeah, it runs out, you know, and so I had a big argument with them, but so they, you know, I made a deal with them, but I'm not happy. I don't think that the report is good. They had an article the other day on the Swiss that was in the currency, which was so shoddy. And then the 2 days before that, they had an article on emerging market currencies making all-time highs against the dollar, the index, the ES.
Yeah.
They go, there's no chance in the world. And that was the headline. I said, there's no chance. I can look at the ruble. I can look at the peso. There's no chance. It cannot be making record highs. And I wrote a nasty comment. They wouldn't print it.
So is there any news sites? If the FT is a shadow of its former self, has the journal picked up any?
No, you know what? I've been reading more Axios and Political.
Yeah.
They used to have such a love for bias. I don't find that. And I actually have enjoyed it. It's far better than, I don't read the New York Times unless there's a truly outstanding article. I just don't. I stopped reading the New York Times in 1977. I have some serious issues with them, and it's not a left-right issue whatsoever because I read far more progressive stuff. It's far better. It's the arrogance of the paper. And, you know, I don't watch media. I don't even have CNBC on anymore. It's gone. I can't get I would watch Bloomberg Television, even though they don't know what the hell they want to do because they're always running up against cannibalizing those machines. So where they have the best journalists, financial journalists, I think, I read that on a one-day delay because I get the $36 a month deal that they offer. So I do read that, and I just scour. You know, I'm on Forex Factory, and because of the blog, which I'm starting to write more frequently, people are back to sending me a shitload of stuff which is good. Then I can be my own filter.
How do you just, somebody had asked me a general question. What do you think of Peter Schiff? Just general thoughts.
Nope.
Okay, I could have answered that
Well,
thing. I think I could have answered that.
It's not that Peter's not smart. It's just always the same.
Yeah. Yes.
So,
where's the nuance?
Yeah. You know, listen, it can't always be the same because I, as money manager, and especially the manager of my own wealth, I can't always be the same and can't wait for that to happen. I can't. That is not the best use of my capital. And that's, as a steward of my capital, I try to be the best that I can. And so when, you know, as Keynes famously said, when the facts change, so do I. Peter never changed.
Ira, I've got to just
Go ahead.
continue. Yeah, just continue. Adam, and if there's any other questions, go ahead and moderate for Ira for me, will you? And
yeah, for a couple, I'll give you a few more minutes. I got to.
all right, Ira, thank you so very much.
Hey.
I'll email you, text you, or call you later. And
All
then
right, be well. When you talk, I haven't talked to Credelli in a while. I'm sure him and I are due for.
I'll talk to him this afternoon.
Yeah, tell him what's wrong. What's wrong? I'm too good for ratings.
Hey, Ira.
Yeah.
Ian asked that if you read The Economist, and if so, what are your thoughts on that?
You know what? I do like The Economist. I used to subscribe to it. It was one of the things I let go, though, because I was reading so much. You know, you just don't have time. I get The Economist stories through the FT sent to me online at the end of the day. I'll peruse them. I don't go in depth to them. They're too much of the FT to me. You know, they are owned by the FT, and they do a lot of the same editorializing. So it's not the go-to that it was for me in the 80s and 90s. I will tell you that. But they're still a quality publication relative to what's out there. Very quality.
Anybody else got any other questions for Ira?
Yeah, let me know.
No, I don't think so. I think you're off the hook.
Yeah, it's not a, listen, it helps me as much as it, hopefully the interlocutor. So that's it.
I think so. Yeah.
All right. I will, hopefully we'll return and do these more frequently. This is a very good group.
Well, here's one last one real quick. This is the
Okay.
last one. Any thoughts on sectors that could see an upside with Biden?
Wait, I didn't hear the, ask it one more time, Adam, I'm sorry.
Any thoughts on the sectors that could see an upside with Biden being president now?
You know, again, I think, some of them have moved already in anticipation. Yeah, but I think, those, and I look at, some of the large engineering, at one time I loved Fluor, but I got out of Fluor around $30, $35, because, I say, when I was on with White Wave, and I talked about many times, as much as I love that, they're just a pathetically run company. But they're one of the few publicly held companies, Jacob Engineering. You can look at those who, if in fact you get truly a big infrastructure, you'll want to take advantage of whoever will be able to benefit from, whether it's a green type, but you're already, all you do is have to look at, and there's another one I'm remiss about not owning, TAN, with the solar energy. I mean, that's been on a tear. So you have to be a little cautious with this, but I would look at the engineering firms and those who will be directly benefit from the amounts of money that will probably go into some real massive infrastructure projects. So where I used to really like Fluor, it's been such a dog, but they did change CEOs. And when the stock was down at $9, $10 and the change came about, it's been up to 18, so it's, people have woken up to it. I still love ABB, the Swedish-Swiss concern, because I think that once the United States goes down openly a massive infrastructure program, everybody else will be following. So that will be a global phenomenon. So I would look there.
All right, thanks. All right, yeah, appreciate you coming in, as always, Ira.
Yeah. Who was that? Was that you, Adam?
Yeah, that was me.
Okay. My pleasure. This is a good group, good questions. Always a solid group. Thanks.
Yeah, it's good. Thank you.
Okay.
All right, take care.
Yeah.